Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the September 18th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. It is another glorious day here in the upper Midwest. We're on a run of about 2 weeks. What better way to celebrate than with the latest from the NDPSR? Starting with butter. This butter number, $3.1828, that's a nice number. That's a 2-cent premium to the CME 1-week average of $3.1594. So a little bit of premium in butter. This is the first week off of our high weekly average for the year. So as this market moves a little bit lower, we continue further lower, even today at the CME, approaching the $3 level. So as this market eases lower at the CME, you would expect that the NDPSR is a little slow to lag, and +2 is probably going to be the norm to even higher basis in the weeks to come. As I mentioned, we had that high week at the CME, a lot of volume trading in prior weeks on the NDPSR. This week, however, short of 2.6 million pounds. So a nice basis relative to the CME weekly average. However, the volume in butter falling a little short. Up next in our cheese markets, we'll start with the blocks. Blocks coming in at $217.27. Well, that's a nice price. That's a +4.5 over the CME 1-week average of $212.80. We traded 9 loads on the CME last week, so volume a little bit light there. And again, prices at the CME trending higher. The NDPSR doing a good job of keeping pace. $217.27 is up about 6.5 from last week's NDPSR number, so a nice move on the NDPSR. However, at that elevated basis level, 4.5 cents is above our expected 2-cent basis. The manufacturer unable to move a whole lot of weight, 10,240,000 pounds. So good price on the NDPSR. However, volume a little bit short of what we would expect. And that theme continues in the barrel, 226.94. That's a +3 to the CME 2-week average of 223.50. We traded 3 loads of barrels on the CME, and amid that lack of sell-side liquidity, the market was able to move substantially higher. 223.51 is a little bit short of our expected basis. So as the markets moved higher at the CME, the NDPSR is slow to move. What is interesting is at this NDPSR level of 226.94, the manufacturer was able to move north of 13.3 million pounds. So really big volume. Still not our expected 13.5, but this is big volume as of late, as there seem to be ample buyers at this 227 level. So how do they respond at the CME, where we finally found a level where you can get some sales? Well, no choice. Take it up. So now the barrel making new all-time highs at the CME. I would expect that this volume level drops in the weeks to come at that exaggerated, elevated level that we have achieved at the CME. In whey, 52.80. We'll call that a -3 to the CME 1-week average of 56.05. We traded 9 loads on the CME. So 9 loads is limited volume on the CME. You know, we've been watching this NDPSR volume here back above 5 million pounds, which is interesting. You know, after volume the prior 2 weeks has fallen short, this week the manufacturer able to call a premium, and at that premium able to move north of 5 million pounds. And when I say premium, of course, I'm referring to the August 31st NDPSR number of 51.15. Manufacturer able to call a $0.015 premium to that, and at that level, big volume. So things seem to be healthy in whey with good premiums and outsized volume. And then lastly, non-fat, 128.17. That's a -3 to the CME 1-week average of 131.15. And that negative basis comes with big volume at the CME. So 31 loads traded at the CME last week at essentially 139 even with that weight going in, still negative basis here, and still short of our expected 20 million pounds, coming in just a little bit over 18.9. So all in all, disappointing volume and price in non-fat. So this is week 2 of 4 for the September pricing period. September class 3 currently coming in at 23.29, with September class 4 coming in at 22.41. So we have that historical relationship between class 3 and class 4 at least estimated for the September expiration. If you carry current CME equivalents out through the 4-week October pricing cycle, getting an October class 3 of 25.25 and an October class 4 of 22.35. So after months of class 3 trading at a discount to the class 4, if everything holds at the CME for the next 4 weeks, you can expect a $3 premium in class 3 over class 4. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige, I'm Joe. Thanks so much for watching. See you next week. Bye.